Welcome to TradeTheMBI.com. This is John's reports for the 8th of April. And of course, we've got our dip that filled the positive extreme. Came so close to our secondary one, but as we've talked about, 80% of that is more than a fill. And I would consider it taken care of, which is why the market bounced pretty strong off that. Of course, everyone's going to say it's because, while they recognize that all these countries all of a sudden want to negotiate because they know that they have been taking advantage and they realize that they're not going to get away with it anymore. They don't want to, but whatever. And then, of course, in the middle of that, Trump then said because China was not cooperating, he only added 50% to their tariff. I thought that was being soft, actually. He was giving them an olive branch because he could have just said, fine, I'll double it to 100% of whatever they add to it. It's a no win for China because what are they going to do? And that's why their market reacted so violently, and they can't sustain it the same way the U.S. can, given the situation they're in. So, yeah, again, he's right. I've been talking about it for a while. You can't panic through those things, but the market did, and of course, that's exactly where the volatility and kind of fun situation goes with it. Even though it's significant moves for people, but if you didn't do anything, then nothing really happened. So it does present a lot of opportunities. As you can see, though, we're still cyan and red here on the DOC, orange caught between it. Now, dip below that 7.5, we would see continuation. Shakeout continues to be unpleasant, I guess would be the way to describe it, but wouldn't take much to bring that. We still haven't dipped below the red line without with all of the selling and that in between here. That happened way up at the peak here right before it began. And it's just a recognition that within this broader construct, there's still a lot more potential for either direction. But as you can see here, MBI white now moving below magenta, and magenta is slightly above. Now, that's not a huge bonus, but when you're talking about this kind of volatility range, now you're talking about big swings. So even right now, we're at plus 80, um, and that's relatively tiny given the size of the bars that you see here. So this is the reality, and that's something I talk about. Some people who set fixed stops for things as opposed to relative to where the average true range of the trading volume. You're just going to get knocked around, and if you can't handle that, then you shouldn't be trading in it. But you have to expand your ranges, um, which is also an expansion of risk. If you're going to be playing, in this kind of volatility situation. However, the opportunities when you are on the right side of the directions can be significant. Uh, there's the little, still shrunken down a little bit on the NASDAQ here just to give you more data points there. But the reality is, it's kind of taken a lot of the froth out of things and put things back into a perspective, but it doesn't mean we still aren't overvalued relative to, what the market multiplier been for quite some time. However, that market multiplier takes into account the inflation that has gone on. But NASDAQ, similar reading. So now you're getting into a congruency here. So despite the relative change in price, you've got the similar behavior, which is key because it just means that everything's starting to align once again and normalize. Does that mean it's going to continue all the way back up? No, we're hitting up against 23% for the NASDAQ. We were already over it for the S&P if we go back to it right there, slightly above it. So it's become key metrics. It's just a matter of, following those zones below that 23%, definitely going to be continued short. But I think with the DOC coming back down here, you had the dip of the short-term buyers in steel and then coming back above presents a more of a buying opportunity within intraday setups. It's still going to be a little bit difficult. And treasuries, of course, the Fed, not interested in getting involved. Kind of what we expected, that they would just sort of be hands off. But, the market was pricing in, relative cuts to that. But as opportunities to jump back in the market, of course, you sell your treasuries to get back in the market. No shock there, especially those that had higher yield ones on there. Definitely could get the bonus on that as things decayed. From oil standpoint, this is your dream areas where it needed to be. As I was saying, it's definitely going to take away the idea of any inflation in that, and that's a huge one. Now, will it stay here? That becomes the real question because if it can maintain in these areas for some number of weeks, you'll have a real impact because that will reduce the costs, at least domestically in America, for production of everything, transportation, you name it. And that has a huge impact, and people don't often give it enough credit for it. Now, this helps the Europeans slightly because, hey, well, they don't have to pay as much for the oil that's being traded for. And peace is obviously being stalled quite a bit. The Europeans don't want it. Ukraine doesn't seem to want that either, at least not under the terms that are currently being offered. And not that they have much of a choice because they keep losing more and more ground by the day. Um, so it's going to be a tough one for the EU if they're going to bounce up their spending in that. So, but of course, this is the suggestion that the dollar is going to somehow suffer because of these trade policies, which it just isn't going to happen. It's foolhardy thinking, but it also means that there's a long-term better prospect for investment in the U.S. that people have been, taking into account. From a gold standpoint, having to get rid of all of their holdings to cover all the margins setups, all we did was fill the positive extreme. That's it, nothing more. And of course, it's bouncing off the 50% right there. Could still go back and forth, but that inflation dip is a big issue for gold going forward because without the inflation trade, then what do you got? Now, of course, Bitcoin came down to fill the positive extreme from when was that? The end of 24. Nice. Bounced off it along with the market, so nothing surprising within that. ETH, though, still struggling and unable to really capture anything. And so this has been a big drain for the crypto market as far as what people have expected. And this is why the futures on those are so important because if you don't have the ability to short and can only sell, then you're limited. Whereas with Bitcoin, you've got the opportunity to go into the futures, now into ETFs, and do that as well without actually having to go through the whole process of holding on to it and trying to trade it out there. And that's what the real, it's the same thing what they did with gold with, ETFs and the same thing. It's just you're trading the paper version of the real thing. And that creates derivatives and all sorts of other issues. And that's where you get a lot of unlocking of those positions when you have these kind of moves. And that's really what we've got. So here, intraday, it was pretty wild. We had a lot of MBI white, filled back to the zeros. Then we had the nice pop up once we were above the 50%, and we got that MBI white. 50% return was the expectation. We got right into there. Magenta, while still weak, stayed above it. We had a pretty big collapse there for shorts. They were happy with the setup to take it. And once we got to the 50%, sort of filled, and then you continue to see the building of a buy set up right around that 50%. The white spike there wasn't able to do anything. And then once Magenta took over, that's your cue right there. When that happens, you know that you're going to get a bounce from it. MBI White popped up one more time, came back to the 50%. So it was a big struggle back and forth between shorts. But as you can see, Magenta able to stay above that 25 crossover, and that's led to where we're at. And while it doesn't seem like a whole lot, that's a pretty good size move from 68 to 51.90. So yeah, that's a lot of points within there just by recognizing where that shift took place and being able to stick with it. But you can see how it all turns around once you get that shakeout moving from the deep red, gets above that negative 13.5 right there, and that's when it started to get solid. And lo and behold, there goes gold rising, and then you move to positive shakeout, and that's where you get the move. And we've, even with the resets that were happening, you were still maintaining above positive shakeout. And this is where this becomes critical, because if you're a positive shakeout, growing histogram, and you have that magenta moving, that's a clear short trap in that particular case. And it played out just like that. That's what's fueling things. So it's neat to see that because it gives you a really clear guideline as to how to follow that in a precise kind of way. Intraday action. There was a lot of excitement early on, and then we had some of the comments and the situation with China. And of course, that's got to get resolved. And there's going to be some hard negotiation stuff going on in between there, and a lot of angry and bitter people. But at the end of the day, what are you going to do? You're not going to trade the U.S. Markets by having your goods uh, crippled. And again, the fallacy that people are going to pay more. Yes, some people will. Some people will choose to buy the same products. Others will look elsewhere or not buy them, and that is not inflationary. And until we can get some economists to wake up and understand how actual economies work, maybe this will help them get into the real world instead of the fantasies they've been operating in. And it makes a lot of them look really stupid in what they've been saying all along about these things, because it just doesn't calculate. And that's fine. They can continue to do it. All we have to do is follow the signals, and that's what we're doing. It's pretty clean from doing that. So we'll take it. As always, know anything relevant, I'll put it in the Skype chat. Have a good one. Trade well.